Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, November 29th, 2018. Uh, Pretty much a go nowhere day, at least on how the markets closed. Although there was some interesting developments throughout the day. Now, today what happened is, of course, we had the FOMC minutes released at 2 o'clock. That's where they released the minutes from their last meeting and what they discussed and all that. So that gave us some movement in the market. But let's take a look what happened and really what it means and what it doesn't mean to the bigger picture. Of course, with the markets not really changing since yesterday. We're looking at here the SPY on a 60-minute chart. You can see the SPY closed down 0.23% with QQQ down 0.33. So we'll call that effectively a flat close. So there won't be a whole lot to update from last night's post, but I do want to point a few things out. Starting out here with the 60-minute chart, what stands out to me is yet another failure. Actually, yesterday I mentioned we fell just shy. I have that 275.13 price target on SPY, and we fell just shy of it. And so today we went ahead and hit it. You can see that we hit it, but yet failed to close. So that's really just a rejection. We can call it a tag of resistance, but also a failure because we tried to pop through their intraday. And as you can see, this big red candle at the close, that is a bearish engulfing candle. It engulfs the body of the previous green candle. But we've seen some back and forth. So we looked down here earlier, and this was almost, you have to split here. Yeah, I guess it qualified. It looks like the body on that candle is just at or below the body of that red candle. Again, this was all due to the FOMC minutes. We had a big reversal intraday today, so we saw some big swings back and forth. Take it for what it's worth. You can, say, okay, well that was bullish, and then this was bearish. So they cancel each other out. Noise. It's really just noise within the intraday charts. The bigger picture is that we've so far, or at this point, we've now effectively hit that target. So SPY has rallied up to the 275.13ish resistance level, as I said, pretty well defined. If it can pop on through there, we can still head up to 281 or so. I'm still very much open to that move, but I don't think we get there right away. I think we pull back. This morning I was looking for a pullback. I posted a post on the front page, the right side of the chart today. Public content just showing the indexes, ETF. I'm sorry, these index ETFs and the futures, 60-minute charts, and showing us coming down to about that 270.53 level. Now at this point, or the downtrend line, this morning they would have come in together when I posted that. So this is what it would have looked like this morning. But of course, we've moved up now. So at best, I'm looking at, I shouldn't say at best, but tomorrow, here's the scenario I'm leaning towards, is a move down, might be pretty sharp, pierce through there on a little momentum fueled overshoot. I'm referring to that uptrend line. Come and kiss that 270.53 target that I was looking for today. Maybe hit it tomorrow, um, and then build up some energy. We've had a pretty strong advance. Is it possible the market just powers through that 275.13 level? Plus, we have some other resistance levels too. I'm going to get to in a minute. Is it possible it powers through and keeps going? Sure, anything's possible, but I doubt it, especially with what's happened recently. So I think right now my most bullish scenario is just a little more consolidation underneath that level. Work off the near-term overbought conditions. You can see the RSI down here overbought. There's the last time we were overbought. You can see what happened from there. So that would help. And you can also see the PPO is starting to turn down at high levels. Those high level bearish crossovers, especially if this is just a counter trend rally with, another thrust down in the market to come. You do not want to be long during that. Now, it could be more. I told you there's some bullish developments on the daily chart, so we could we could come on up here, but I just want to point out these levels. So there's my scenario right now, just looking near term, take it day by day, see what happens tomorrow. But I do favor, some little more consolidation, a pullback again down to about that level there, at least the trend line here, and more likely that 270.50-ish level on SPY. And from there, we'll see what happens. We'll see how things look, how the charts develop. If we get a lot more than that, that may sort of rule out a move up here to 281, which I'm open to right now. But I mentioned on the site before the close today, I had started over the last week or two, starting last week, scaling out of all my shorts and into long positions, even in IRAs, and I sold out the TQQ and other QQQ long positions today. I still have some Apple, but that's about it. And reverse that to SQQQ. We're really at some pretty key resistance levels. Let's go to QQQ while we're talking about it here. All right, so the big level I was targeting before, 168.67, that was hit yesterday, as I mentioned. And then again today, QQQ tried to pop above it. And same story, you can see there's a bullish engulfing candle or close to it intraday, but then at the end of the day we had a bearish engulfing candle, and that was my expectation too. We had I'll get to the daily charts in a second. Pretty much there's a wall of resistance overhead. We're looking at 60-minute charts right now, but again we have some more significant important levels on the daily time frames just overhead. Like I said, nothing shocks or even surprises me in the markets anymore, but it would be pretty impressive to see the market just blast on through the 200-day and 50-day EMAs, which we'll get to here in a second, out on the daily time frame. So on QQQ, just to wrap this up quick, same story on the 60-minute. You have the PPO starting to turn down at high levels. We haven't made a bearish crossover yet, but again, if the market is about to take another leg down, this could be the last stop, shorting up on this counter trend bounce. So you have to be aware of that. Again, just like SPY I showed you a minute ago, here's the last time we were overbought on the 60-minute chart, and we had a high level bearish PPO crossover about at this level here, and you can see what happened then. Again, the technicals this time around were more bullish to justify this advance. But actually, we had a divergent low back there too at the time. So we had a rally up to that high. There it is. You can see the divergence. So, I'm laying out a couple different cases here. And, certainly any of those could happen. But, give you my opinion. And that's what it is. A little more downside from here tomorrow into the, we'll see what happens. It's easier to call a level on where the market or a particular stock is going than to call when it's going to get there. And that's one reason I'm not an options trader. I like to trade individual stocks, futures, ETFs, because what I'm good at is identifying where they may go. Sometimes they take longer to do so. So if we get a quick swoon down, heck, we could gap down overnight. Anything can happen. I could be wrong. We can gap up and come all the way up there. But, if this 166-ish target is hit, it can happen in many forms. And if it happens quickly and, move down the futures overnight, then the target's hit and we can bounce. Or maybe we open flat tomorrow and then move down, assuming that I'm right. Yeah, but that's what it would look like. You can see that comparable uptrend line on QQQ here. I'm referring to comparable to the one on SPY I showed you earlier. And so it would look something like this. If we pop down, maybe a quick momentum fueled overshoot. So call it, that they're in close enough proximity now. This is the closing value today. So we'll see what happens tomorrow. But I'm still leaning towards that. And there's certainly the potential to see more downside. If 166 is taken out, and if it's taken out with conviction, we see support also go on SPY. You can see I don't have a whole lot down here at about 163.45, and there's another potential uptrend line that comes into play. I need to tighten that trend line up a little bit to come in with those candles, but there it is. So there's your potential pullback target zone right now, and I'm talking very active trader stuff. But I think it's important too, if you're a less active swing trader, trend trader right now, I think this video, well, let's get to the daily charts. No, before we do that, let's look at the 60-minute charts of the futures. All right, so here's the NQ NASDAQ 100 E-mini futures. I'm going to just tighten it up here, zoom in a little bit, and just look at the recent price action. This morning, before the market opened, when I posted the charts on SPY, QQQ, and the futures, I highlighted what appeared to be just, nice looking bear flag pattern. They weren't this long back then, in fact, because some of that trading happened today. So they were about right here or so. It looked like that. And this is your flagpole. And I talked about the nature of a a bull flag pattern. You have an impulsive move up. We call that the flagpole, leading to an area of consolidation where volume tapers off a bit. And then you have an explosive move out. And usually the move out and above the flag is just as impulsive and about roughly equal in length to the move leading up to it, i.e. the flagpole. And I said I didn't expect that to happen because it was too easy. Too many eyes would be watching that. Too many longs would be positioned for that. And so I was predicting a failure. And we got both. And we failed, but we didn't go down and hit my pullback targets today. I still think they'll get hit. And again, this was all, come 2 p.m. today. That's when you had the FOMC minutes and the market shot up and then it, shot down into the close. So just a mess, really. But take it all aside and bigger picture, if you forget about all the intraday noise and back that out, there's that same level I've been talking about right here on NQ, and that's comparable to that target on QQQ. So what we have here is another failed attempt. Well, yesterday we failed right at that level. Today we popped it on the post FOMC minute, rally, but then they faded it. And so that is nothing more than simply a failed breakout, a failed attempt to take out resistance, and it happened too with that bearish engulfing candle right there. You can see that big red candle back to back right after the green candle. However, we had back to back. We had a big red candle there followed by an equally almost a perfectly symmetrical green candle. So again, at the end of the day, however you want to process this, that was bullish, but then you had bearish here. But at the end of the day, we failed. We've yet to take out resistance. So you can look at it glass half full, saying, "Oh, the bulls are pushing, pushing, pushing. They're going to take this out. Maybe they do, maybe they don't." Um, you know, I favor it if it is taken out, and I'm open to that. I'm certainly open to that. But if it is, I still think we come back in first. And there's an uptrend line on NQ. You can see that would be a nice pullback target tomorrow. And at that point, maybe I'll cover some shorts and because I do think we'll get a bounce there most likely. What do we have down here? PPO. We have I wanted to point that out too. Potential negative divergence. You can see the indicators down below. So I drew a divergent line here on NQ. There's a divergence. Prices making higher highs. RSI and the PPO making lower highs. Not the most clean divergence because we never had a bullish cross, but darn close. We also had a rejection there. It looked like we were going to get a bullish crossover on the PPO, but it failed to do so. So that is NQ on the 60-minute chart. So let's take a quick look at ES. It almost mirrors it. Same story. The most salient developments today was a rejection at that 2751-ish resistance level that I have. It's a well-defined resistance line. You can see it go back here. I covered that yesterday. And there was our what appeared, heading into this morning's trading to look like a textbook bull flag, but it was foiled. First, it broke to the downside, then we whipped up, so you didn't have a clean breakout. And then at the end of the day, when all was said and done, this is what it looks like. Again, big red candle right there, following the green candle into the close. And what you're seeing now, this green candle, the futures keep trading after the market's closed. So there's another green candle. But that big red 60-minute candle was the end of the day candle. It just shows that a lot of sellers stepped in, profit taking, and most importantly, is that we failed on the attempt to take out that key resistance level. All right, let's go to the daily charts and we'll wrap it up there. This is a daily of QQQ. And the bigger picture, as I pointed out yesterday, some of the things that I'm watching, and I have to imagine a lot of traders are watching, and investors, are these key moving averages. Some people use simple moving averages, and sometimes I will, depends on the security. I'm using the exponential moving averages. I'm looking at the 20 and 50. They are poised to make a death cross. It hasn't happened yet. That would be if the 50 crosses down below the 200-day moving average. Either way, whether they give you that or if they give you that, it's only because momentum is going to turn to the downside. You're not going to get a death cross unless we either continue to trade sideways for a while, because that would also bring down the MAs. If you're not going up and the trend was up, you're going to bring them down. But of course, a pullback here. So if we get rejected, then that would give us a death cross. But forget about the death cross for a second. Sometimes I think people put a little too heavy weighting on that, especially when everybody's watching them and trying to use that as a signal. But what you can't take away from these MAs are how great they act as support and resistance. Again, these were corrections right here. So that's why you went under the 50. Those were the only two corrections we've had in over a year. But other than that, you go back and you see the 50-day moving average just doing a bang-up job of acting as support for the QQQ. And we broke it there, a clear and impulsive breakdown. That's what you want to see. And on every attempt so far, we've failed. So we're coming up to that 50. We've got a little room because it's above the 200. And then the 200 has also done a bang-up job It's a slower moving average, so it's contained. It really helps to define the primary trends, bull and bear trends. And so you have two very important, well-watched moving averages just above QQQ. You also have some pretty significant price resistance. There's my bounce target zone. So although anything is possible, I'd put very good odds at best the markets have to consolidate here, and again that's at best. Pull back, build up some energy to punch through there, and I'm not talking an intraday pop. I'm talking a solid close, especially a weekly close up back above these. And at worst we fail and we get another that flush out move that I was looking for before, still open to. Um, but we'll see what happens. I just want to point out resistance is resistance until and unless broken. So that's what the markets are looking at. And then when you look at SPY, same story there, the 50 and 200, and they're even closer. They're close to crossing right now, giving you that death cross when the 50 crosses down below the 200. And whether that's what happens or not, again, you can't argue that they don't act as that they're not important support and resistance levels, and you can see they're coming in together. So yesterday, if you really zoom in tight, um, you can see that's where the advance halted in SPY right there. There's top of that candle. It halted there, halted this candle right here. You can see that wick up at the top, the candlestick shadow. Look at all these rejections here at the 200, and it was support, support, support until broken. Once it broke, you had very impulsive selling. You came back to it, and yeah, we've traded up and through it a couple of times recently with all the volatility, but that doesn't take away its significance. So that's that, and like I said, and then today you can see we popped up through it intra-period, made a near perfect kiss of the 50-day moving average, and reversed from there to close back below both of them again. So that's it. That's all I'm trying to say is anything can and will happen, but the market has a lot of work to do overhead, a lot of resistance, and I still favor more than just this little pullback here, whether we have to consolidate for a while or whether we reverse down and, we could come down. We don't have to go all the way back and make a new low, but it's certainly in the realm of possibilities right now. And if you start to see impulsive selling after rejection here in the next couple days, maybe into next week, we'll have to watch for some support levels. I'll lay those out if and when that starts to happen. If we get a rejection there, you can see some of them now. And I already covered some of those on the 60-minute chart. So, all right, that's where we're at. And we'll just have to see what happens tomorrow and into next week. Tomorrow's the end of the month. So maybe they want to park it somewhere around here, keep everybody guessing. Who knows? Anything could happen. Let's just take it as it comes. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.